In today's video, I will show you a live trade in the euro dollar in the 15-minute time frame. Someone in another video made a comment that would be nice to see some of the new techniques in a real-time environment. So this video will give you a taste of the level of analysis that you can get with the new price action trading course. Let's jump right into the analysis itself. From number 1 to number 2, I marked two important events to the chart. Number 1 is a solid major low in this market that was rendered as solid due to number 2 when the major buyers of this market made a clear statement about their power. Observe the type of volatility on the vector between number 1 and number 2. Around level number 3 is where buyers were expected to create some sort of reaction to the sellers coming down after number 2. However, as you can see in number 3, those buyers were only capable of creating a minor bump to the upside, and the sellers continued to go down, disproving the solid low in number 1. Notice that number 3 is a hybrid bar that shows a fractal divergence and a lot of buying pressure. In terms of the bar itself, the buying pressure is significant, but when you compare it to the sellers that this bar is going against, the buying pressure on that lower candle wick is minimal. Number 3 doesn't seem to be very significant, but it represents a pivotal moment in this market. That's the pernicious thing about price action. Sometimes, small events are much more important than the events that grab your attention immediately, like that upward vector between number 1 and number 2. From number 3 to number 4, sellers made a statement by disproving the major buyers. That's one of the types of shift in trend or shift in flow in the markets. You have to remember that traders need to treat success and failures as types of information, and both are equally useful. The short trade you see open here was triggered as a sell limit ordered at the inward frequency line in number 5. That level represents the key moment where sellers assumed the control of the market and the buyers became a secondary player in the game. The stop loss was placed above the minor high that preceded the moment where the sellers disproved the buyers. That's a general idea of this trade, and it's the main storyline of this market. So now let's talk about the line work you see in here and how it points to a probable point of reversal and therefore an optimal take profit target for this short position. We have two standard pitchforks in red and blue in this chart. Both share the same BC anchor points, where one is a real anchor point and the other is an abstract anchor point derived from one of the types of a negative market extrapolation of the major price vector created by the sellers who are dominating the market at the moment. The only difference between the two forks is the tail anchoring position, but both are in major highs in the chart. The black rectangle in the chart shows the principle of validation of the blue fork and the abstract anchor point in number 6, which renders the red fork as valid as well, since it has similar anchoring points as the blue one. The vertical light gray lines are Fibonacci time tool grounded on the beginning of the major selling vector of the chart and the abstract anchor point in number 6. Notice that in the first moment, all this line work might appear to be disconnected, but all these lines intersect at number 7 almost exactly in what I call triple focal point. Rather intuitively, that represents a very good take profit idea for the short position, especially when you look at the ratio between the small stop and the large target. So let's see how the market develops. Here you can clearly see that price reached the target point almost exactly in terms of space and time. Observe the power of being able not only to predict where price is going to land, but also when it's going to land there. The lower tail of the candle that hits the target also shows the validity of the line work that was developed for this trade. There are other subtle ideas at play here, like the principle of reverse engineering that guides you on which lines you should draw and at which places, which is an extremely useful idea, but that's a subject for another video. So if you found this analysis to be interesting and wish to learn more about it, check out my new price action trading video course in the link available in the video description. In this course, I outline my theory of price action from the ground up, and I explain different perspectives to analyze price action and over 40 different techniques that will enrich your trading arsenal. I will also leave the official video release in the description if you want to check out the table of contents of the price action course. So I hope you learned something new with this video. If you enjoyed it and wish to support the channel, please click the like button, subscribe to the channel, activate the notifications button so you don't miss future uploads, and leave your feedback below in the comment section. Thank you very much for watching, and I hope to see you in the next videos. Take care.